2.0.
Hello and happy holidays. Lenska here with another market update and outlook. Let's see what national data is telling us, how San Diego is comparing, and what indications do we see that will tell us how 2023 will pan out for us. Hang tight, lots of charts and graphs and data, and as always, no fortune telling, only fortune building for you and your portfolio.
And just a comment before we dive into real estate. You probably have been following the whole crypto corruption and nightmare and how a company is set up to manage your money and your investments. And when you look and invested in FTX, your ROI and your return of investment went down to 0 and your money is gone. Now, hire me as your real estate agent. You have one person that will make sure you find the right investment properties and you will have a 4 to 8% ROI and your real estate value never goes to 0. Goes on in our national market. We have the shares of AI-powered home flipper disruptor and spec open door get annihilated, and we also saw the biggest price drops since the housing bust. We do see 68% of price houses that have price reductions in Boise. Remember, that was one of Zoomtown's favorite. Case-Shiller Home Price Index revealed diminishing appreciation. Crushed mortgage lenders that had interest rates from 7% go up from 3.5% a year ago. We have raging inflation, which kills buyer demand. So the Fed was kind of successful in his mission. And Redfin lost an average of $50,000 per fix and flip. And inflation pushes voters to even approve more rent control ordinances. And if this isn't enough, if this is not enough, the cancellation rates doubled or tripled in the most recent quarter compared to 2021. So if in 2021 we were anywhere between like 6.5% and actually LGI had nearly 20%. But if we look at the quarter 3 in 2022, we see like over 30% in some home builders. Now, what's going on in San Diego? Median home price is down. We were at 880 right here in May, and since May it has been practically nosediving, and currently we only have a year-over-year appreciation of 3.4%. I guesstimate that this will go lower as we close out the year. And currently at 765,000. Now the median home price for detached is 8.85, only appreciation of 2.8, but we are compensating for an appreciation of 8.4% and attached units, which actually saw a little uptick in median home price. We also do see a slowing down market. Practically it takes 50% more longer. Pending sales and sold listings are down. We know that. And the inventory increased to 1.7 months. So we're nearly double what we were in our best times. We were about, actually we were down 6 to 6 months, 3 weeks of inventory. So currently, right, the last couple of weeks in November, we were actually already down to 750, but it kind of leveled off in the last weeks. So let's hope we don't see any more declines. But as you can see, in the last few weeks, a lot of houses did go into escrow because everybody wanted to be in for things for Christmas. And this is a tell story that the average price of original price is the lowest it has been since 2019, 96%. We were at some point at 106, and that's where we get a lot of multiple offers. Speaking of multiple offers, still that house was listed in beginning of November. Look at the original list price, $650. It got bid up right now to $740. That doesn't mean it's the final sales price. And yes, it had 32 offers. That's what we still see in San Diego. We still see some multiple offers, which results in, you can tell that there are multiple offers because 29 out of 90 homes still close above list price. And that data, as you guys can see, that was close of escrow date was 11 November 9th. Now that was to single family. Now, what is the biggest competition for single family? It's multifamily. So we have more units under construction for multifamily than single family homes. And specifically in September, we have 893 units in buildings with 5 units or more compared to 800,000 single family units which were under construction. So meanwhile, it's worth noting that the number of single family units under construction has decreased for the last 4 straight months. On the other hand, the number of multifamily units under construction has increased for nearly the last couple of years. So just to show you what's going on in San Diego, we have 5 units plus. We're building about 4,200 in 22 and 21. Same for single family. We're practically steady around the 2,000 to 600. So we're building a little more in 2022. But if you look to LA, obviously they are having many more units. And going to Riverside, 5 units, it's actually doubling. And they do have a slight increase also in the single family. So will be curious what Riverside's cap rate's going to look like once all that inventory comes on the market. So 1 million apartment units to be completed and come online, and this is national data, in 2024. This chart down there, the difference between the orange line and the blue line practically tells you that there are 550,000 apartments units waiting to be delivered. So you might be wondering how this apartment backlog grew so large. Obviously, one reason is the pandemic. So we have some delays there. And so the result is that many apartment projects kind of stalled and they're getting slowly caught up. Now, obviously, everything is interest rates driven, and currently we are down from the high from 7.25% to 6.81%, and maybe a slightly dip below. Which means for lenders, their refi business is down 90% and the mortgage applications at lowest level which equals into layoffs at lenders, as I mentioned before. Many properties were listed, and during the listing, the interest rates went up. So there was no choice that prices had to come down, and many properties received price reduction. And the percentage of properties receiving those price reductions is currently still climbing, and we're currently at 43%. That's nearly every other house. Now, in San Diego, we're doing a little bit better. We're actually only having about 33% in San Diego County. No surprise with price reductions, rising interest rates, buyers and sellers just find nothing positive about the current housing market. So the housing sentiment, what Fannie Mae measures every month, falls to the lowest level ever. Only 16% of consumers believe it's a good time to buy a home. Below the chart shows you the buying conditions and selling conditions. So here you're 16% to buy, and only 51% of sellers says it's a good time, but 42% says a bad time. So we're talking only a 9%, but overall, look at all the negative numbers. So the only thing is that people feel pretty secure in their job. But again, that's usually where I have it circled. Even so, with the higher inflation, it might have peaked, but I don't think inflation is coming down quickly, because also the income, the wages are not catching up with inflation. Now let's look at the rents. So asking rents have peaked and are trending slightly down on a national basis. According to RealPage, effective asking rents declined by 0.6% in October across the U.S. rental market. This was the third largest monthly decline in rent since 2010, only trailing the initial pandemic months of April and May in 2020, and it was the second monthly decline in a row, following a 0.3 drop in September. Now, obviously, falling rents, higher prices, what will it do? It is a pressure on cap rates. So as we can see, San Diego has a cap rate of about 3%. Okay, so rent in 2022 was $40,000 or $41,000, call it, compared to the income of $27,000. And with a price in October like 2022, as we just had earlier, about $880,000. So, but the good news is that actually San Diego was amongst the leaders in annual rent growth. Congratulations. And we have the rent growth trailers, and to no surprise, we got Reno, Las Vegas. Where is Boise, Idaho? Here it is. So San Francisco, San Antonio, Austin, or Phoenix, Sacramento, all the towns that have and cities that have seen an increase in excess, I would say. Reduced cap rates, no wonder that institutional investors nationwide accounted for only 6.7%, or translated, 1 in every 15 single-family home purchases was purchased by an institutional investor. So they're pulling back a little bit. Prices have probably peaked.
Who is celebrating? Who popped the cork? Maybe the person that bought the dip in is right now. Interest rates a little lower and we had less competition. Another takeaway is to choose your out-of-state investment property wisely. Lots of factors to consider. We will see maybe cap rates condense a little bit next year if we do see more inventory. And then, since it's a holiday season, I have a fun fact for you. 1 in 3 men wait until Christmas Eve to do their holiday shopping. Hopefully they don't run out of diamond rings. Happy holidays to everybody and a lot of success with your real estate investments. If you do need help, you know where to find me.
Data and PowerPoint presentations are great, but priceless is to go out in the field and actually see and feel and smell and analyze homes and properties. That is happening the third Saturday of each month. You can find me on Meetup under Real Estate Investing Field Trip. Thank you so much for listening and being fans, and happy holidays and a prosperous 2023.